Hello dear colleagues, we are Team H.
And we're glad to present you our equity report.
And we'd like to start our presentation. Let's begin with executive summary. We issue a buy recommendation due to next factors. First, leading position of Alrosa on the market. Second, growing demand for the diamonds in the future. Third, clear strategy of Alrosa and well-developed corporate governance practice. And fourth, ability of the company to mitigate the risks. Therefore, the target price will be 91.83 Russian rubles, that implies upside of 1.6%. Later, we will stop on each point separately.
One of the main factors that influenced our evaluation and our decision is the fact that Alrosa is one of the largest companies in the world producing diamonds. Alrosa accounts for the 25% of the world's diamond production, with more than 1.1 billion carats proven reserves, which are mainly concentrated in Russia and Africa. The company was formed in 1957 based on Yakut Almaz, and since then it has been developing very successfully, implementing best practices of optimization and digitalization of their processes and industrial production. More than 95% of Alrosa's value chain is concentrated in diamond production sphere, and mainly in rough diamond production, which is more than 98%. And this year, Alrosa started jewelry production with the acquisition of Smolensk Crystal. Another strong point of the company is that it has recently improved its revenues, financial ratios, and especially it has the highest EBITDA margin among its peers.
Now let's talk about the situation in the industry. In 2019, volatile market of rough diamonds falls. The main reason for this dynamic is the fact that the demand for diamonds depends on the demand for diamonds jewelry, which is mainly made by consumers in the United States. One should note here that the Generation X is 68% of global personal luxury goods market. Structure of global personal luxury goods market will change, and Asian countries, particularly China, will occupy a larger share because the number of millionaires will grow and the Generation X will decrease. Diamond supply is a oligopolistic market. It will be influenced by changing popularity of other luxury goods as substitutes. Development of synthetic diamonds, which are more accessible in mid-class segment, and with effect of complicated supply chain. The arguments we have presented would indicate that rough diamond sales is expected to grow by 3% annually by 2029.
One more factor that has influenced our evaluation is Alrosa's strategy, which has four main directions. First, exploration and geographic extension. The company is interested in expanding its presence on the African continent because almost a half of all diamond reserves are concentrated here. A joint venture with Zimbabwe Consolidated Diamond Company will give the opportunity to operate throughout the whole country. Alrosa is also strengthening its presence in Angola by increasing its stake in Katoka joint venture. Second, focus on three major markets. Alrosa is targeting the fast-growing markets of India and China because of several reasons. First, the growth of real disposable income, the growth of middle class in these regions, and also their increase in diamond jewelry demand by 2030. The company is also strengthening its position in the USA by increasing transparency in business and environmental impact, what makes it more attractive to American retailers. Third, multi-directional marketing strategy. The company will continue cutting large and colored rough diamonds, which will help Alrosa to stand out among the competitors and gain market niche. The implementation of tracing system will help to attract consumers by providing them with information on the full life cycle of a diamond. The collaboration with large Russian banks will help to develop new sales channels, for example, online platform. And finally, the company will continue to work on increase in operational efficiency, which may presumably lead to a 12% productivity growth by 2024. The implementation of this strategy will be supported by a profound corporate governance system in the company.
In our team, there are four main types of risks that Alrosa faces, namely macroeconomic, currency, political, and lack of reserves risk. Economic risks include economic crisis, which will affect consumer activity on the jewelry market, especially among millennials, Gen Z, and middle class, and also trade war between China and the US, which are the two main target markets for diamonds. Currency risks associated with the fact that in Alrosa 74% of cost and capex are in rubles, when 95% of that structure is in United States dollars. Lack of reserves risks are connected with natural risks such as accidents in an underground mine or open pit mining, also fires or a natural disaster. This type of risks have the highest potential negative impact but the lowest probability. Political risks, which in the opinion of our team have the highest probability and a very high potential negative impact due to factors such as high corruption level, economic sanctions, unpredictable political changes, and the fact that Alrosa is a state-owned company.
Our valuation of the company was based on DCF model and main 6 groups of assumptions. The first and the most important is revenue. We assume that it will grow 5% annually and it is higher than the market on average. Bearing in mind Alrosa's strategy, which includes optimization and disposal of non-core assets, we assume that COGS will be reduced. Our estimated capex is 206 billion Russian rubles based on Alrosa investment program with adjustments for 2020. We expect further working capital requirement optimization due to reduction of the impact of whip effect in the supply chain. We used weighted average cost of capital at the level of 16.8% and terminal growth rate at the level of 3%. We took into account new dividend policy of Alrosa linked to free cash flow and EBITDA debt ratio. As for figures, EBITDA margin will be 56% and net income margin will be 37%. It is higher than the figures of 2019. Based on our calculations, the target price will be 91.83 Russian rubles, what is 1.6% higher than current one. So, dear colleagues, what we're gonna do?
Buy!